Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. Here is your daily technical analysis of LME 3-month copper and aluminium. I'll start with LME 3-month copper. A second bullish white soldier yesterday and a suitable follow-on higher to the previous session's interesting key reversal. Prices punched up through the 50% Fibonacci line in October 2020 to March 2022 move at 85.56, but did not manage to close over it nor reach the mid-November highs, though they came awfully close. Additionally, prices shied away from testing the next big overhead resistance, and that's the declining long-moving average, currently at 86.03. The base of the support was a combination of the lesser Fibonacci line at 84.40 and a September 2012 high at 84.24. Looking below, we have support at the February 2013 high at 83.50, whilst there is then some free air that stretches down to the January 2021 high at 82.39. Overall, this was now the second highest high since mid-June. In the big picture, the market is still within the mid-July to late August based bull channel, currently 75.50 to 87.02. There is only the April 2012 high at 86.65 between the top of the long-moving average and the upper bull channel line. All this loosens the pressure on last week's beautiful-looking weekly key reversal up. Finally, the long honeymoon of the rising short-medium moving average, currently at 78.75, and the rising medium moving average, currently 78.53, is over. What started on the 18th of November has been consummated this week into a golden cross. Now, so far today, a significant attempt higher, back up through the 50% Fibonacci line at 85.56, and more importantly, through the declining long-moving average, if only briefly. Though this is actually an important development by doing this. This is the first time the market has breached the long-moving average since early June, though looking back there, that didn't end so well. LME 3-month aluminium. Yet another, the third in a row, indecisive doji cross yesterday, opening and closing once again just below the congestion at 25.08, though with a longer tongue this time rather than a tail that stretches below. I'm beginning to wonder if these last three sessions might be a tri-star pattern. More on this should it develop. It seems that either or maybe both of the following two factors have capped the recent rise and consequently asks a big question over last week's weekly key reversal up. The factors were the recent achievement of target X in the 25.60 area, the primary target for the late August to early November diamond bottom pattern, something I've been harping on about now for quite a while. In addition to the primary target X, we have a secondary harder to achieve target X1, and if the congestion away is to be believed, a much harder to achieve target X1 in the 26.52 area. The second factor was the congestion overhead at 25.63, with the aid of the nearby December 2021 low at 25.81. This was, still is I suppose, just a gateway to a whole band of overhead congestion, starting at 25.63, then at 25.81, 26.08, 26.22, 26.49 and 26.66. That's the August 2011 high, and then finally at 26.75. The 26.49 level has additional reinforcement from the declining long-moving average, currently 26.54. As I suppose, so does target X1. So far today, a tiny test up to the overhead congestion at 25.08, but a stronger move lower. Not that large as yet, despite there being no real support below, until congestion at 24.41, and the market has seemingly not taken full advantage of this. I am again wondering if this is the result of a possible tri-star pattern formed over the last three sessions. Thank you for listening. This short version broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final bit.